Imagine a digital dollar, backed by the U.S. government, used for global trade and controlled by private companies. Sounds futuristic, right? But what if I told you it just became reality? In a landmark move, the U.S. Senate has passed a bill to regulate stablecoins, a $150 billion industry, with the full support of U.S. President Donald Trump and over $130 million in crypto lobbying power behind it. But why are some lawmakers calling this bill a ticking time bomb? Why are Democrats fighting each other over it? And how is President Trump personally profiting from it? Let's break it all down with logic and facts. Let's start with the basics. What exactly is a stablecoin? Unlike Bitcoin or Ethereum, whose prices fluctuate wildly, that's why most businesses and banks hesitate to adopt them. Stablecoins are different. These are digital currencies that are usually pegged to the value of a stable asset, typically the US dollar. That means one stablecoin equals $1. This makes them perfect for payments, remittances, and cross-border trade, without the volatility of traditional crypto. Think of it as a digital dollar that moves instantly, 24/7, and across borders. No bank delays, no wire fees. For example, you want to send money from Dubai to the US. Instead of going through SWIFT and waiting 3 days, you just send stablecoins. No delays, no heavy fees. But until now, there were no federal laws regulating how these stablecoins work in the U.S. And that's where the Genius Act comes in. The Genius Act, passed with 68 votes in favor in the Senate, is the first major federal crypto bill in U.S. history. This is a rare moment of agreement in American politics. This shows us how powerful the crypto lobby has become in the U.S. It creates a clear regulatory framework for stablecoins. Here's what it does. First, it requires stablecoin issuers to register and follow federal standards. Second, it gives oversight powers to a new federal board and the federal institution, FDIC, for certain stablecoin-related activities. And lastly, it opens the door for banks and fintech firms to issue their own stablecoins with government approval. Companies like Circle, which issues USDC, and Tether have already issued billions of dollars worth of these coins, and they're growing fast. After this bill passed, Circle's stock price soared 170% in one day. Supporters, like Republican Senator Bill Hagerty, the bill's lead sponsor, say it will modernize payments, boost the demand for U.S. treasuries, and preserve the dollar's dominance in global finance. He says, to modernize our payment system and restore our nation's competitive edge, we must act now. But not everyone agrees. The bill may have passed, but it's deeply controversial, especially among Democrats. Progressive senators like Elizabeth Warren and Chuck Schumer are warning that the Genius Act has weak consumer protections and no anti-corruption rules. They try to introduce amendments to bar sitting presidents, like President Trump, and their families from issuing or profiting from stablecoins. But Republicans blocked those changes. Why? Because under President Trump's leadership, the GOP has taken a pro-crypto stance. This isn't just policy, it's personal. The Trump family has invested heavily in crypto, and President Trump himself has launched crypto coins and NFTs. That means he, as a sitting president, could personally profit from the very sector his government now oversees. Senator Jeff Merkley said it best. We need guardrails that ensure government officials aren't asking people to buy their coins for personal profit. But those guardrails never made it into the final law. So how did this bill, with so many unanswered questions, still pass? The answer lies in money and elections. Ahead of the 2024 elections, crypto companies and Silicon Valley investors created super PACs and spent over $130 million to influence tight congressional races. The result? Their candidates, both Republicans and moderate Democrats, won 53 out of 58 races. That's a success rate of over 90%. And once they got to Washington, these lawmakers helped push the Genius Act through the Senate. This isn't just about digital money. It's about political power and how emerging industries can shape legislation with the right mix of funding, strategy, and timing. The Genius Act is a historic milestone. For the first time, the U.S. government is embracing a part of the crypto world, and stablecoins, once seen as risky, now have a path to legitimacy. This could make payments faster, cheaper, and more secure. It could also preserve America's role as the global currency leader in an age where China is already pushing its own digital yuan. But at the same time, the law raises serious concerns. Who regulates the regulators? Should tech giants be allowed to issue digital dollars? And should public officials be allowed to profit from the industries they oversee? These are not just legal questions, they're ethical ones. So what do you think? Should President Trump and other leaders be allowed to launch their own coins? Will stablecoins help or hurt the economy in the long run? Thanks for watching. Hope you all have a wonderful day.